Welcome back. In this update, we're taking a fresh look at NIO stock following Friday's trading session, and we'll be diving into what might be coming next week for investors who are watching this story unfold closely. This follows a strong week overall for NIO, where the stock rallied sharply before cooling off slightly on Friday. Even with that pullback, there's still plenty of energy around the stock, and a number of interesting developments are brewing just beneath the surface. Let's begin with Friday's action. NIO opened the day at around $4.35 and traded between about $4.29 and $4.56 throughout the session. It ended the day just slightly down, around 1.5 cents lower than the previous close. Volume was strong, coming in at nearly 78 million shares, which shows there's still heavy interest and engagement from both institutional and retail traders. This wasn't a sell-off, it looked more like a healthy breather after a hot run earlier in the week. Profit-taking was expected, especially after multiple sessions of strong upward momentum. Importantly, there was no negative news dragging the stock down. This wasn't about missed earnings or weak guidance. It was simply a cooling-off period after the excitement of rising deliveries, positive investor sentiment, and the growing buzz around a potential short squeeze. So from a technical and psychological standpoint, Friday's trade doesn't derail the bigger story. If anything, it sets up a new opportunity heading into next week. Now, if you've been following NIO lately, you know the short interest angle has become a big talking point. As of the most recent reporting, roughly 191 million shares of NIO are sold short. That's close to 10% of the publicly traded float. With daily volumes picking up significantly, now regularly topping 70, 80, even 100 million shares per day, the stock is in a potentially volatile zone. There's about 5 days' worth of volume tied up in those short positions. That's enough to make people nervous, especially if even a small catalyst causes the price to spike and shorts start scrambling to cover. And now, let's look ahead. What's on the horizon for NIO in the next few days that could move the needle? First, there's continued development around NIO's battery swap network. This part of their business model has been debated a lot over the years. Some see it as a visionary infrastructure play, others as a cash burn. But recently, there's been a meaningful shift. NIO has said that around 20% of their swap stations have already hit break-even, and the stations in Shanghai are basically profitable. Now, here's where it gets interesting. There's been a strategic investment from CATL, China's largest battery maker, into NIO's battery swap operator, known as Miratary. That adds credibility, funding, and the possibility that battery swap economics are becoming more viable. Watch for more updates on this next week. If NIO releases new swap station figures or reveals localized profitability milestones, that could be a catalyst for the stock. Second, there's the rollout of the Onvo L90 SUV. Pre-sales have started, and deliveries are expected to begin on August 1st. This is a big deal for NIO. The L90 is positioned as a more spacious, family-focused electric SUV, and it's designed to compete directly with Tesla's Model Y and XPeng's G6. Investors will be watching closely for data on early reservations, pricing details, and any sign of expansion beyond the domestic market. If NIO can show that demand for this new model is strong, it'll reinforce the idea that the company is gaining market share, not just in one niche, but across a broader consumer base. Third, there's the development of NIO's in-house chip unit. This part hasn't gotten as much attention, but it's worth tracking. The company is reportedly seeking strategic investors for this division, which designs autonomous driving chips and other core technologies. If NIO can find a partner or secure outside capital, it could help reduce the development burden while keeping them competitive in the EV arms race. Keep an eye on this space next week. Any update on partnerships or funding here could move the stock. And then of course, there's the short squeeze angle. It's not gone. In fact, borrow fees to short NIO have been ticking up, which means it's becoming more expensive to bet against the stock. That adds pressure on short sellers. If we see a continuation of strong volume and even a small bump in price next week, it could trigger another wave of short covering. Combine that with the battery swap progress and upcoming model launch, and you've got a recipe for continued volatility, potentially to the upside. But just like we said last time, let's keep things grounded. NIO is still not profitable. They posted a significant net loss last quarter, over $900 million. The company is aiming to hit break-even by the end of 2025, and while they're making progress with cost reductions and infrastructure efficiency, they still have a long road ahead. The path to profitability is real, but it's not guaranteed. At the same time, the broader EV market is also shifting. Investors are becoming more selective. Companies like Tesla and BYD have proven staying power, and newer players need to show that they can scale, sustain margins, and build brand loyalty. NIO has the tech. It has the vision. And this week's trading showed that it still has the ability to excite the market. But now the company has to follow through, with deliveries, margins, and smart capital allocation. So, what's the bottom line as we head into next week? Friday's trade was calm, but it wasn't weak. It was consolidation after strength. The battery swap business is showing real signs of maturity. New vehicles are launching. Strategic moves are happening in the background. And the short interest setup still looms. If any one of these pieces clicks into place next week, whether it's a swap station update, chip unit deal, or strong Onvo L90 pre-orders, NIO could catch another leg up. But as always, stay informed. Follow the data. And don't get caught chasing headlines. There's real opportunity here, but also real risk. Thanks for watching, or listening, depending on where you're tuning in. If there are any major developments over the weekend or early next week, I'll be sure to bring you another update. Until then, stay sharp, and keep your eye on NIO.